Stocks, but Ajay sir, believe that you are back with us. Please go on and help us with your take on the markets. That what factors and reasons can drive the market ahead from these levels?
Yeah, thank you. Again, some Wi-Fi issues. Overall, if you see the budget on balance has been positive for the markets. Infrastructure spend has been maintained. The fiscal deficit goes down, which creates some amount of space for RBI to cut, and consumption got a booster. Then, as far as the RBI policy went, it was positive in terms of the rate cut, but keeping the policy stance at neutral was a surprise. We were expecting that they would move to accommodative and acknowledge that now they would be focusing more on growth rather than inflation. And then the press conference commentary where the governor justified that, saying that there's too much global uncertainty and they've stayed at neutral. That has created some doubt in the market's mind. The third factor today was no liquidity measures being put out. But I would say those are not required to be announced in an MPC. The RBI will always bring in durable liquidity. That is what he said. But I think there was some overreaction. The positive got left out in that one, the rate cut happened. Second, the postponement of project financing and LCR guidelines. Remember, the LCR guidelines meant about 10 to 15% having to be kept as a buffer, liquidity buffer by banks for internet-enabled deposits. That would have been a big drag on banks. That has got postponed at least to next year, March 2026 at the earliest. Same with project financing guidelines, where 5% buffer provisions would have had to be kept in under construction projects. That has again got postponed by nearly 14 months at the least. Those were two very big positives that got left out. I think it was a market overreaction of being quite exuberant coming into this RBI policy, that new governor, new stance, and new thinking will come in. New thinking came in terms of a very belated interest rate cut, but I think the RBI bureaucracy stuck to its heels and kept the stance neutral, and we did not see a liquidity announcement. That was the negative driving the markets downwards today. Overall, globally, Mr. Modi visiting US next week is a positive. We are expecting that some amount of defense agreements to be signed, some amount of equipment purchases to be announced by India. And already we are seeing some relief being given on tariffs on US goods. And we should see a shake of hands, which should give some amount of focus to the markets. Overall, not a great earnings season, but the next quarter is starting to look better. And with this rate cut, we will see the rate sensitives do better. So I think today was an overreaction on the banking side. NBFC's funding costs go down almost immediately. Auto, real estate, and banks all will benefit from this rate cut. And any company with a large loan outstanding, like the very leveraged infrastructure companies, they will also benefit from lower rates. And our thinking is 2 to 3 more rate cuts in the rest of the year.